This is the Scrap Metal Commodities Recycling Report by BENLEE Roll-Off Lugger and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, Monday, July 18th, 2016. In this report, commodity prices were mixed while the U.S. stock market hit new all-time highs. U.S. steel production declined again last week and has been trending down for a few weeks. Oil prices finished up at about $46 a barrel and remains close to double the $26 a barrel of just 6 months ago. Oil rigs that use enormous amounts of steel had their count rise for the 6th time in the last 7 weeks. So we may have seen the worst of this major drop. Iron ore prices rose about 5% for the week and are up 16% in the last month. At about $58 a metric ton, prices remain about 57% above where they were just 7 months ago. Recent increases could help stabilize ferrous scrap prices that have been falling. But large amounts of imported scrap and HBI, a scrap metal substitute, will continue to put downward pressure on scrap ferrous prices. Turkey is a major buyer of U.S. scrap metal. The attempted takeover by the military days ago could mean at least some delays in exports, which could hurt U.S. scrap sales and lower scrap prices. Scrap ferrous prices have declined, but there is now a better balance of U.S. scrap ferrous. The huge flow of cars and demolition scrap that flooded scrap yards in the past 90 days has ended. This was caused by low prices had material sitting for over 9 months. Hot rolled coil steel prices remain near their record high, but are actually down a bit. With scrap ferrous prices falling and demand just good, not great, prices could remain stable. 304 stainless scrap prices remain near their record highs, but we are hearing in some markets there is upward pressure which could show increases next week in this chart. Copper rose for the week and is near a 2-month high, but the increases have opened spreads a bit. When looking at the 5-year copper chart, the story remains that copper has gone nowhere for about 9 months. Importantly, though, we see copper inventories have been rising, so there is no reason to think that copper prices will continue to rise. Aluminum declined late in the week, but was actually up for the entire week. And aluminum's 5-year chart continues to show an upward trend. Yet aluminum inventories continue to decline, and prices are increasing, so we could see more aluminum production coming online in the coming months. Higher production should limit major price increases going forward and can actually bring price declines. Last week, Alcoa, the world's leader in aluminum, beat earnings and forecast that full year 2016 deliveries will be flat to up 3%, followed by a strong double-digit growth in 2017. A new chart this week is the U.S. labor force participation rate. Due to a lack of good middle-class jobs, we see that since just before the crash of 2008, many people had started leaving the workforce. But in reality, we see in the 65-year chart why we have major jobs problems in the United States and why in many cases commodity prices could be higher and the economy could be better. For about the last 18 years, people have been leaving the workforce, which reduces consumption and keeps prices down, as well as contributes to social problems within our country. Initial jobless claims remain steady at 254,000, which is the lowest level since April, and since it remains well below 300,000, it continues to lead to a very slowly improving job market. China, the world's second largest economy, but the world's largest manufacturing economy, just reported a 6.7% growth in the second quarter, which is actually stabilization after many years of declines. Related, China's steel production hit record levels in June. A big welcome to the Automotive Recycling Association membership to getting this report. We have made this weekly news video available at no cost to ARA to support the overall recycling economy, which helps reduce energy use and creates good jobs. With that, we hope all have a safe and profitable week. My name is Greg Brown.